Everyone. Thank you for coming out in the inclement weather, and that means you're allowed to have a second brownie bite, at least. We're happy to announce that we have for our, I think it's the 97th Patriot Games Forum here at the Huntington Library for the LIPC. We have a renowned guest from the Union of Radical and Economic Politics. Paddy was a professor there at St. Francis. She was born in England, and she studied at Oxford and Harvard. So I think we have a wonderful program ahead. First, we'll have a video, then Ms. Quick will talk to us, and we'll have questions and answers, right? Right. Okay, very good. Thank you.
Because I actually think that's a very appropriate slogan, and anyone who says they're unsophisticated should figure how sophisticated politicians are who say the way to get rid of unemployment is to lay off government workers. There's no sophistication in that stupidity. So we want to I wanted to move towards why I actually really do seriously think that the phrase Occupy Wall Street is a very useful phrase for all of us. I want to start, however, in looking at banking, drawing a distinction between two different kinds of banks. One is what are called commercial banks, and the other is the investment banks and the non-bank banks, the shadow banking was talked about in some of the videos. We're mostly familiar with commercial banks. That's where we where we keep our checking accounts, and that's where we go for mortgages. And we think we understand it, but it's actually quite tricky. I remember when I was learning economics, the way I was told that banking worked was that we, and I'll come to who the we is, that we put our money in the banks and then the banks lend it out to people. And so they give us maybe 1% on our, well, actually it's 0 right now, but they give us 1% on the money we put in, and then they lend it out at 3%, and that's how they make their money. And my question I had, and I couldn't get anyone to answer it, was, what if I take my money and put it under my pillow? What if I put it under my mattress? What if I don't take it and put it in the bank? And there is an answer to this, but it's more complicated. The video is correct that we can't think of money in terms of bills and coins. We have to think of it in terms of checking accounts. So let's just forget bills and coins completely and think of it in terms of checking accounts. And now we'll think about what the bank does, which is they make loans. Now, when they make a loan, they don't actually take the dollar bills and give it to somebody. What they do is they credit their checking account. Or maybe they give us a loan. What did I hit? Okay. Maybe they give us a loan for a car, and the car dealer puts it in their account. I must have hit something, right? Sorry about that. Okay. And the end result is that there is more in the checking account. What a loan is the creation of a financial asset. It's called a piece of paper, if you like, so that when a bank makes a loan, they have an asset, meaning what you signed in blood, and that is their asset, and you have a liability. This is, you have sworn that you will pay them interest and pay the money back. But in the meantime, you do have the money. The dollar bills, forget about. This is what commercial banks do. When they make loans, they create money, and that part is good, because what that means is that then the people who receive the loans, let's suppose it's for a new, let's say it's for a new house, no, a new car. Now, the automobile companies can produce additional cars that are then purchased, and people get jobs in the automobile industry. The automobile companies make their profit. But that's good, because what the commercial banking system is supposed to do, and we'll see what happens when it goes wrong, is by making loans, allow the unused resources of the society to be put to use. Allow the automobile factories to reopen, allow the automobile workers to get their jobs back. When mortgages are made for new housing, that means that now there is money in the system that can allow the construction companies to build the houses and the construction workers to get the jobs. So that the commercial banking system, in making loans, is able to mobilize the resources, the unused resources of the society. That is true no matter what political system or economic system you're talking about. That when people, if you like, put the money under their pillow instead of using it to buy something, how is that something going to be bought now? Well, it's going to be bought through the commercial banking system. Okay. Now, I'm making it sound good, but we'll come to a little bit about whether this is good. There is, by the way, this is the point at which the Federal Reserve tries to make sure that the banks lend enough to create full employment, and they have various tools for doing that. Won't go into that. And at the same time, they have to be careful that they don't lend too much, because if people start trying to buy more than the resources of the society can produce, you are going to get inflation. We have a real economy out there with real people who are doing the work and real tools that they are using. So there is a limit to what a society can produce. But if you want to increase the production, you have to increase the credit that can be used to purchase those goods. But now let me come to a little kicker here. We think of it because what we were seeing, particularly in some of the video, is the fraud and the horrendous way in which the commercial banks actually rip people off. Because now we have to draw a distinction, which most banking books and textbooks in economics never do. We've got to make a distinction between workers and capitalists. I'm sorry, we've just got to make that distinction. Because when the commercial banks are making loans to workers, they are going to collect interest and they are going to collect fees, and that's going to come straight out of our pockets. And they're going to get as much of that as they possibly can. And they are going to get rich and we are going to get poor from it. Let's just get absolutely straight. That's money out of our pocket into their pocket. So that people, the capitalists as a whole, get rich two ways. One is in the workplace, where they only return some of what we've produced back to us in the form of wages, and they keep the rest as profits. But the other way is through the banking system, where they collect interest and fees, and they do it as much as they possibly can. And there's, it's kind of like loan sharking. It's just a rip-off, okay? And the fraud, we'll come to a little bit about how the fraud got worse over time. But that really is something that people have experienced and on some level understand. But it's different for capitalists. Okay? When banks make loans to industrial corporations, the profits that are made in the automobile industry are split between General Motors and the banks. They share them out. So that when Bank of America makes a loan, and they make a loan to an industrial corporation that then does real production of real things, General Motors then has to pay them interest out of what they've made and keep the rest, which is called corporate profits. Now there you've got one set of capitalists dealing with another set of capitalists. I mean, they overlap a lot. But there, that's not so much that the people who are taking loans from the banks are being ripped off. General Motors is not being ripped off by Bank of America. The two of them are sharing the spoils. So that we have to distinguish, as I say, between the relationship between banks and workers and between banks and other corporations in our economic system. So what we're looking at there is part of how capital works through our economic system, and how the profits are generated in one place are going to be recycled into another place. But once we do that, we've got to recognize that there's more to our banking system than the commercial banks. Okay. Commercial banks are where the loans are made, money is created, and as I say, if things work out well, where the unused resources of our society, the people who do the work, and the tools, and the land, and the farmland, and the machinery, all of that being taken from being idle and put to use, that's what commercial banks do. But the other kind of banking is called, start with, investment banking. And we don't know about investment banks because to be dealing with maybe people have jobs in them, but investment banks is when a large corporation goes and wants to raise more money, and they don't just put an advertisement in the paper, who wants to give money to me? They go to an investment bank, which then mobilizes the resources from pension funds, from mutual funds, from insurance companies, and channels that to the corporations that are raising money, and they take a cut, typically about 8% of what they raise. Now that's, in a sense, that's another part of banking, and it's not something you see on Main Street. That's a different part of our financial system. And that's only the start of it. Because what in addition to the investment banks, kind of starting with the investment banks, but moving over to other institutions, the investment banks are also involved in something they will call risk management and portfolio management. And this is when they take the resources of capitalists, because capitalists don't put all their money in the commercial banks, they put their money elsewhere. They take those and start playing around with them. They start taking things like the mortgages that the banks had issued. They buy them from the banks, from the commercial banks that issued the mortgages, and then they slice them, dice them, package them, put bows and ribbons on them, and sell them in various different forms. It's called derivatives, it's called mortgage-backed securities, and it becomes incredibly complicated, so complicated that the bankers themselves didn't really understand them. And they slice them and dice them, and they say, this is the nice safe portion, and this isn't as safe, and and you can, if you want to have just all the principal payments that are going to come due in the month of February 2013, here's a package for you. Oh, you want the interest payments on some other? Okay, here's another package for you. All the different packages. And then they got the rating agencies, Standard & Poor's, and what was the other one, to say how safe they were. And they said, oh, very safe, give us money and we'll tell you they're safe. And so they gave them the money. They said, AAA, oh, these are nice, really safe, because insurance companies aren't allowed to, officially aren't allowed to buy really risky assets. So now the insurance companies buy these AAA rated, really, really, really safe things that have been created. Now, the creation of financial assets is writing a piece of paper. There's no production in there. There's no more food, no more housing, no more clothing, no real production. The creation of financial assets is giving one person an asset matched by a liability on the other. Then they went further, so that if you weren't sure about whether one of these kind of shaky things was really going to pay off, they'll sell you an insurance package on it. It's called a credit default swap. And if you pay them money, like pay them $5, and if the security doesn't pay off, then that little contract says they'll give you the $100. So then that's another asset that has been created. It's another piece of paper that has been made that is bought and sold. And then those credit default swaps are packaged up and put in. Underneath it all you've got real loans, like real mortgages. And when the housing market started to collapse, it turned out that the money that was supposed to go back to the people that had purchased these securities wasn't there. And AIG, as an insurance company, had issued a lot of these insurance packages on these crazy derivatives and couldn't pay up because the actual money at that point to pay the mortgages wasn't there. And that starts shaking the entire financial system, because when AIG can't pay, then the people who are counting on AIG to make payments to them, they go under, and then they're not going to have the money to pay someone else, and it rattles all the way through the financial system. And it was extremely hard to deal with. We know the real impact in terms of real people's lives and what it did to people. The bankers also saw some real problems on this, and the Federal Reserve, which has a real regulatory role, was supposed to try and sort this out, and they found it hard to do this. I remember reading one thing was put out by the Federal Reserve Bank of New York, which is one of the real biggies within the system. And it was an article entitled, "Where are the toxic assets?" Toxic assets meaning the things that turn out not to be worth anything even though you thought they were super. And they said, we don't know. We don't know who has them. We don't know which institutions are holding these assets that they say are worth a lot but actually aren't worth the paper they're written on. And so we don't know exactly who to bail out. We don't know what to do. We're actually seeing the same thing now with Greece's default crisis, that we know what Greece owes, but what we don't know is who issued the little insurance payments on those Greek bonds. They don't know which banks have them, because they're not part of the commercial banking system, which is the most regulated system that we have. Maybe not regulated very well, but it is regulated. And the Federal Reserve knows how those commercial banks work. They know what they have, they inspect them, they find out what the assets have. The toxic assets they don't know. And remember in the video they're saying about when they're foreclosing on a house, who owns the mortgage? See, that's a very difficult question when you've sliced and diced it up and packaged it and repackaged it and put it with something else. It's not clear who owns the mortgage. It's not a single piece of paper anymore. It's been shredded into many pieces and kind of stuck together in the whole other assets all over the place. And so they really honestly didn't know what was going on. They really had a very hard time. Now, when you don't know what's going on, easy solution, just throw money at it. That's fairly simple, right? You just take taxpayers' money and just dish it all out, and that'll help the banks. That'll help, so that AIG was taken over, and then they arranged for Merrill Lynch to move into Bank of America, and they shuffled things around and put out all the money, and that was fine for the banks, obviously. Is going to come out of the taxpayers, but they weren't worried about that because our tax system has shifted so much to taxing workers that they don't care about that. It's going to come back onto us. The banks doing okay. We read a lot, by the way, about the problem of high executive salaries. I think that's a distraction. The executive salaries are indeed ridiculously high, but again, that's a kind of a little fight among the people at the very top. You're going to take your wealth in the form of capital gains, stock options, interest, or how about executive salaries? Yeah, let's kind of figure out how we're going to give it to the folks at the top, and they alter how to do that. And so some of the big shareholders would rather that more of it went in dividends and capital gains rather than executive salaries, but the big executives they're capitalists too. They own millions of dollars and in their own institutions, and they just trying to figure out how to do this, how to take their money. If we think of it, they try and use the word where we're all receiving salaries, wages, and the inequality in our system is that they have too high salaries compared to us. It's like all the income in the society is paid in wages and salaries. I don't think so. I think they've kind of left out the interest and the profits in that, okay? You've got to have that part in there. Okay, let me come to what kind of possible solutions and reforms there might be. There are some reform proposals that make sense. Things like requiring the commercial banks to hold on to the loans that they issue until maturity so that they'll be a little more sensible. Because when they could just pass them off to somebody else and collect fees by doing so, do you see that that's going to make them really want to just give out mortgages to anybody? If they know that they can con other people into taking these mortgages, they can collect the fees. And the liar loans that they talked about were the lies of the commercial banks to the people who took out the mortgages. Don't worry, your income is fine. We know that you'll be able to manage to pay this back. Sign here, sign here, sign here. The idea that the people who took out the loans, the mortgage loans, are responsible is, I think, an evil step. I know when I was fortunate enough to be able to buy a house, I must have signed my name to I don't know how many pieces of paper, 40 pieces, something like that. I don't know what it was. It was kind of before everything went crazy, so I don't think I actually was really ripped off, but I wouldn't have known if I was. You apply for a mortgage and the bank tells you, yeah, that's fine, you qualify. You say, oh, good. So the liar loans were the lies of the banks. So if the commercial banks were required to hold on to those loans, they'd be a lot more careful about making sure that they only lent money to people that could reasonably pay it back. But there are other possibilities. The talk about the Bank of North Dakota, I'm not sure we can manage it in New York, but there is another institution of banking on the commercial level that is a viable option, and that's the credit unions. The credit unions take deposits and they make loans. They are not-for-profit organizations, so that they have the possibility of making the loans based on need and what they think is good for community development. They are governed on the basis of one person, one vote, regardless of the size of your account. Rather than $1, one vote, it really is one person, one vote. But of course, democracy is only as good as you can, really make sure you've got it very well functioning. But you see, our money, our meaning the 99%, to use the Occupy Wall Street term, is such a small proportion of the total capital and money in the economy that it's not a solution to the whole problem. It's a perfectly reasonable thing and a good thing to support and take advantage of, but it's not going to tackle the problems of the banking system as a whole and all the problems that have come about from that. And the credit unions have a problem. They still have to cover expenses. And to cover expenses, they do have to make loans, and it's not clear right now in our depressed economy where you can make loans that are really going to generate the revenue that you need to employ your staff. Okay, there are real expenses in running a credit union. So the credit unions have difficulty in this period. It's hard to make that revenue and cover expenses. For the rest of the financial system, there's a whole group of people, including some good liberal left economists, who say what we need is to split up the big banks and have more competition. That's not how banking works. Banking has been agglomerating more and more over time, and so other people say what we really need is more regulation. Okay, more regulation. Let's have the Federal Reserve step in again and re-regulate the banking system, including these non-bank banks, these ones that aren't commercial banks and so on, and let's have it tighter. Let's have one big thing they call for is transparency. Let's have all these derivatives and mortgage-backed securities and credit default, all these things. Let's have a trading system where we can keep track of what's going on. That's a good idea. But that's really asking the Federal Reserve to act on behalf of us. But you see, the Federal Reserve is acting on behalf of the banks. It really is itself part of the banking system. It isn't so much that they're privately owned. The profits that they make on the assets they hold go back to the Treasury. It's that they're governed by the banking system. The Federal Open Market Committee, which makes kind of a lot of the decisions, and the whole Federal Reserve System is based on the regional Federal Reserves, which are owned by the member banks. And they get to elect the presidents of their local banks, or their region, which then make the decisions. Bankers have more than one vote in our system. So asking the Federal Reserve, asking the bankers to get the banking system in shape is tricky. It might be a good idea, because clearly when the capitalist system starts falling to bits, it's bad for them, but obviously it's bad for us too. They seem to be doing a very bad job of taking care of their own interests. They seem to really be making a mess of their own system, let alone thinking about us. So trying to get the Federal Reserve to control it is tricky. But I say I'd rather that they didn't mess up our system, because it really does do a lot of damage to us. Nationalize the banks. Okay. What's happening with the banks? They're sitting on piles of money and they're not lending it. Okay, let's take them over and start lending the money, using the money for state and local projects, using it for infrastructure, rather than having the banks decide what's going to happen. But nationalize the banks implies that then the government's going to make the decisions. But are we sure we trust the government to make those decisions? As they said, what government? Goldman Sachs is the government. And that's where you come to this slogan, Occupy Wall Street. That what you need to do is to get control of that banking system, get control of those assets. Now, how exactly you do that, what's involved, that's a whole other story. Can I take questions? I'm almost finished, and I'll take questions at the end. The Federal Reserve has run out of steam. They can't do anything much to deal with the banking crisis. They can't get the banks to lend more money. We really need fiscal policy for that. We need the government within this system to spend the money. So we need to put the pressure on. But in order to do that, we really do have to tackle the banks. Because I am afraid at this point, I really, really think that I made a joke at the beginning, I don't know how much of a joke it is, that they think they can solve the problems by laying off government workers. That's the solution to unemployment. See, I'm not convinced that at this point they actually want to reduce unemployment. I think at this point they're saying the really big people, the really big corporations can easily sit out a 5-7 year period of misery if at the end of it wages have been reduced by 15%, unemployment compensation has been cut, the unions have been smashed, education has been destroyed, healthcare systems in trouble, and then they say, now let's start from scratch and now we'll expand. And so they take their losses for a certain period of time and then start off again with a much, much weakened working class, much lower wages, much less provision of government services. And that is being enforced through the very top levels of the banking system, where the question of whether policy is going to be desirable or not is judged in terms of how it affects what's called the markets. And if the big people at the top of the markets are saying this would be unwise for us, then it really is very difficult for those policies to be put into effect, so that they're policies which are not going to be discussed in the open. And you're certainly never going to find any executive standing up at a news conference and saying, well, actually, I'd like to see unemployment continue over 9% for the next 4 years. I mean, we obviously are not going to see that happen. But as I say, I think that's a better explanation for why they don't do what seems perfectly obvious, which is to increase spending rather than cut spending. There is a logic behind it. So let me stop there, and I'm sure people have questions and other things that they'd like to talk about.
To increase spending, you got to create money. People have to have money to be able to spend it. If they don't have the money, how are they going to spend it?
Okay, like I say, when loans are made, the money is created. If you get a loan for an automobile, you can now buy an automobile that you couldn't before, right? Mostly that's how people buy automobiles and houses. I don't know anyone.
A lot of people buy automobiles that way, yes.
Yeah, I don't know anyone that's ever bought a house. Well, it said there was somebody in one of the videos said they bought a whole house with cash.
That's right.
So you need the loan.
Very few.
You need the
Very few.
loan. You need the loan in order to.
But you have to have a job to be able to spend money. If you don't have a job, you don't have the money to spend.
So for that, you need to increase the spending, and that can be done by the government increasing its spending, by the government borrowing money and using that to increase its spending. They can do that. They do that all the time.
Thank you. A comment and a question. The comment is that you don't have to think conspiratorially about the banks to get the same result. They just have to be very cautious about not wanting to lose their money, and therefore wouldn't want to lend money to somebody who has an iffy risk of repayment. So because if they lend money and it creates a job, that's one job, spread out over the whole country. If that doesn't create the job, they lose their entire loan. So the benefits are to the society, the harm is to them. So they're very risk averse at this point. My question is, Canada has something like half a dozen large banks. Okay, Canada has something like half a dozen large banks. They have not gotten themselves into the same pickle that the U.S. banks have. Why are things different up in Canada?
Okay, on the first one, yes, indeed, the banks aren't making loans because they'd rather just sit on their money than lend it and make a loss. Okay, that's very clear. They're sitting on $2 to $3 trillion in reserves that, under normal circumstances, they'd say, oh, good, we can lend this out and make money. Now they're not doing that. The additional demand has to come at this point from government spending. So that in that sense, the conspiracy I see, and I don't really think it's conspiracy, I think it's policy, is over the government policy as to why they think that it's better to lay people off than to use government funds to prevent state and local governments from laying people off, which could be done quite easily. On Canada, I actually think Canada's ruling class is a little more together than ours. I think that they regulate their system more carefully. They haven't allowed the derivatives to get out of control. Here we came off a whole era, a whole period of deregulation, and whatever you think works will be fine, the free market. And the deregulation has been enormous over time, and we just haven't kept track of that. It was fairly clear in the United States that we had a housing bubble. Anyone could see it. I mean, you didn't have to even really go through the data, although it was all there. And the Federal Reserve could easily have said, look, we see there's a housing bubble, folks, be careful. That's all. You just have a press conference, for goodness sake. No, it'll just all take care of itself. Bubbles come, bubbles go. Let's worry about it. We had some very, very stupid people in our system. And they say they hurt themselves. I'm more worried about they hurt us, but they did hurt themselves as well. So I think we have a dysfunctional ruling class at this point, and I think that's very unfortunate for us. Not that I want them to do well, but their misfortunes are our misfortunes at this point.
The ruling class, to use your term, is not letting this crisis go to waste.
Right. They're taking advantage of it in every way they possibly can.
Do you think that derivatives should exist at all? Yes?
Sure. Yeah,
Why?
some derivatives can make sense. So that it's kind of called, originally it was called like hedging your bets. So that if you're a bookie in the betting business and you get a lot of bets on one particular horse, you lay off that somewhere else. You bet on the other side so that you're not going to collapse. That's okay. There's nothing particularly wrong with that. In the sector in agriculture, farmers will make contracts to sell their wheat long before it's even been sown, because they're kind of hedging against the possibility that it could be a bad crop. And so they're going to pay for someone else to take the risk. But no, there are ways of avoiding some of those risks. That's what insurance really is. I'm lucky enough to have health insurance. I'm glad I do. I hope I don't have to use it. That's so quite a derivative, but it's along those lines. So I don't think we want to kind of scrap the whole financial system and derivatives with it. But they have got out of control, and they need to be straightforward, transparent, and everyone should know what's going on. At one point, the Bank for International Settlements, which is the central bankers' bank in Europe that covers the European Central Bank and the Federal Reserve and all the other banks, were saying quite a while ago, we don't know what these derivatives are. Banks are entering into contracts, and they have no idea what they're doing. And that was said by the Lamfalussy, who was the head of the PIS. Now, that's ridiculous to get to that level. But as I say, I don't think you want to kind of junk a whole financial system. I think it needs to be under
what I had in
control.
mind was, at one time, you got a mortgage, and it was between yourself and the bank. And that imposed on each side responsibilities.
Mm-hmm.
Today, you the payer have the responsibility, but you don't know who the other side is.
Yeah.
So
Now, I say that's one of the reforms they're thinking about, that the commercial banks would have to keep on their books. They're actually saying only 10% of the loans, the mortgage loans that they make, so that at least they have some sense of responsibility instead of conning people into taking out mortgages that they knew that were going to fail. They knew very, very well they were going to fail. So if they were forced to keep them so that it was between the bank and you, the bank would have some responsibility in making that original deal. So I think we may see some kind of reforms on that, which would be good.
Now, the
Thanks.
main thing I wanted to raise really was something I brought to the attention of the head of our Federal Reserve, Mr. Bernanke, a year and a half ago. I wrote him a letter, which was received. I did get acknowledged by the secretary, and I was told it was going to be relegated to the appropriate committee, and that's the end of that. Well, here's the idea. If the Federal Reserve is allowed, and indeed it's its duty, to buy and sell, well, particularly buy U.S. bonds of the federal government, and then toss money into the system, why can't it do the same for state bonds and munis? I'd like your take on that.
Yeah, I don't know the answer to that. I don't know what the restrictions are, or what the Federal Reserve's how it relates to the states as opposed to the 12 Federal Reserve banks, Federal Reserve districts. They have moved away from simply buying, whether it's good or bad, simply buying government bonds, buying and selling government bonds. About half of their holdings now are in mortgage-backed securities. So that's putting money into the banking system. But again, it's just sitting there. That they're putting the money in that would enable the banks to make the loans, but the banks aren't making the loans. And there's no way, they use the analogy for Federal Reserve policy that if they want to tighten things, they can do it. We call it pulling on a string. You sell the government bonds, you pull money out of the system, and then the banks can't make the loans. But the opposite is pushing on a string. And that doesn't quite work. So they put a lot of funds into the reserves and into the banks, and it's gone absolutely nowhere.
Well, as I pointed out, when I wrote this letter to Bernanke, the president had recently come into office, and he had a majority in both houses of Congress. In any case, I said at the time that, of course, the Senate the Republicans in the Senate were playing a terrible game, the party of no. It wouldn't let anything that wouldn't get a vote of 60 senators pass. So I suggested that if the Federal Reserve would start buying, or rather selling, buying munis and state bonds, they could obviate the problem, and therefore we would not have so many teachers and other state employees and other municipal employees fired. So that was and I said he would become the hero of the day. Yeah. I guess he's not interested in heroism.
I think they'd also have difficulty figuring out which states and which municipalities.
Well, I think that they could certainly, when a state wants to sell a bond or a municipality, they certainly can explore it and investigate it and decide which is the one that they could safely lend and which they couldn't. So I'm not saying they should necessarily buy every bond of the munis and the states, but they should at least entertain that possibility.
I mean, one of the problems is that states aren't allowed, apart from some exceptions, to run deficits. States are required to balance their budgets. So it's not clear how you couldn't have tax money going from the federal government in revenue sharing to the states and municipalities. I'm not sure how the Federal Reserve would fit into that.
I think they will resort to that if conditions get significantly worse.
Yeah. We'll see.
I read this book called The Big Short, and it's about people who saw the financial crisis coming, the mortgage crisis coming, and called up investment banks and said, could I buy some insurance on some mortgage-backed securities? And they didn't own these securities, but the way these derivatives are, you can buy insurance on anything. Yep. Like I don't think I can buy insurance on my neighbor's house because this would give me the incentive to burn it down. But anyway, so these smart guys, there weren't that many of them, bought...
Bet against the...
They bought insurance on these mortgage-backed securities that they didn't own, and the mortgage-backed securities tanked, and they were owed billions and billions of dollars by these by these brilliant geniuses at Goldman Sachs and all these other places, and the government's response was to pay off all the gambling debts. It was gambling, and it just seems to me that why should the taxpayer pay off the gambling debts of all these banks? And that's what happened. And so I guess my question, if I can add a question to it, is what about taxing derivatives?
What about taxing the rich in general? Since they're not using their money for production, let's take it away from them, and we've got plenty of good ways to use it. But they partly, I think, they actually did panic, and they threw money at the system. They just threw it. They were really, really panicked about what was going on, and then they obviously don't care about the taxpayers. They don't care about the regular folks, and this was a way they saw to stabilize the system. In some ways, doing nothing really would have been a bad idea. if the financial system really had completely caved in, we'd be seeing more like 30% unemployment rather than 9.1. So I am glad they at least saw that they needed to do something, but they did it very, very quickly. The first set of TARP funds was a 3-page document. I mean, eventually they spun it out to be a bit more, but the idea that in 3 days you come up with a 3-page document to fix an entire system indicates how really upset and dangerous they saw the situation. But yes, it could have been done a lot better, and they definitely paid off the people at the top who were sitting pretty. Corporate profits are doing quite well. The banks are still a bit shaky, but overall, officially, the economy is in recovery. Because officially, and it's true, production is actually growing a little bit, not enough to take care of the new people coming into the workforce, so unemployment's going up, but the definition of a recession is when production is actually falling, and it's not. You know, it's growing, maybe I think the last figure was at a rate of 2.5%, but for the year as a whole it'd be maybe 1.2%. It's got to grow at about 2.5% just to keep unemployment steady. But they're not suffering all that much, particularly at the top.
My question is, since that crisis, maybe it's still ongoing, what are the restrictions on commercial banks and investment banks? Can you describe them right now?
Well, in 1933, the Glass-Steagall Act separated the commercial banks from the investment banks because the investment banks were involved in more risky business, and the commercial banks, which was the deposit and the loan system, they shored that up very well. That was when we got the Federal Deposit Insurance Corporation, so that you didn't have runs on the banks, because I think now if you've got 250,000, you're safe. If you've got more than 250,000, by the way, you should put it into 2 separate banks. I like to give useful advice to people. So that was one part of it. The other part was the commercial banks that were getting in trouble had access to funds from the Federal Reserve. It's called the discount window. They could lend them money. They already put in 400 billion, I think, through the discount window into the commercial banks. But then in 1999, Congress abolished the distinction between investment banks and commercial banks, so that the risks then spread. And the investment banks turned themselves into bank holding companies, so that then they would have access to the Federal Reserve window and be able to borrow, but in the meantime the system had got out of control. So the commercial banking is still, we still have the FDIC, and that was a good system for preventing these runs on the banks. Everybody goes down trying to get their money out, and the banks would have to sell their assets at fire sale, and they wouldn't get enough back to cover the deposits. But meantime, of course, a lot of the funds are not in that system. They're in things like hedge funds. Hedge funds are tricky. Again, most people here probably aren't involved in hedge funds, because you need to have, I gather, about $1 million to kind of get into one of those. But there's nothing, in a sense, at the moment, to prevent somebody with multi-million dollars saying, let's just pool our money and see what we can do with it. And there's virtually tiny little bits of regulation on that. But it's, as I say, it's very hard for the moment to even know what they're doing. So that the regulations there are fairly weak. So it's on this other section of the banking system that the regulations are extremely weak. Even in terms of requiring them to report what they're doing, let alone say what they can and cannot do. The first step is to find out what they're doing, get the facts. The next step is to figure ways to prevent this ridiculous extent of risk that they're taking and that isn't transparent. But at the moment, the reporting system's very weak. So there's very little regulation on a lot of that.
Restrictions on the investment banks?
There's restrictions on the IPOs, on the initial public offerings, in terms of the ways in which they raise funds for new shares, new bonds. But in terms of the the risk management and the way in which they manage their assets, much less. And in terms of what's called proprietary trading, where they trade on their own account with their own money. Oh, it's my own money, we can do whatever we want with it. Oh, but in the meantime, the funds that they're playing around with are more than the total funds in the regular commercial banking system. And that's where it's very weak, and that's where the regulations need to be beefed up. So as I say, proprietary trading, which the commercial banks now can do as well, because the division has kind of got spread up. So can you do whatever you want with your own money?
I was under the impression that a company like Goldman Sachs was made into a holding company.
A bank holding company.
Once it accepted the TARP funds. Is it now a bank holding company?
Bank holding company,
Is it no
rather.
longer an investment bank?
Well, it means that one part of it is a bank, one part of it is a commercial bank. And so if one part of it is a commercial bank and you get in trouble over here, you borrow money over here and then slip it over there. You go to the Fed, collect money for our poor commercial banks in trouble, and we're so worried about our depositors, and then you take the money and you move it over to where you've been having problems with your derivatives. So the bank holding company is kind of a conglomerate within the financial system, but it includes commercial banking. It used to be that the commercial banks were a completely separate set of banks. So when we talk about the banks, yeah, we've got to recognize that it goes now beyond just the commercial banks into these others.
I just wanted to say thank you. I have enough information to keep myself agonized for quite a few weeks. It's good to hear Clinton mention as part of the problem, doing away with the separation of the banks. I also want to remind anybody who would like to talk more about this, a small group of Nation magazine readers meet at the cinema every Tuesday at 1 o'clock for lunch and discussion of all these sort of things.
Wow.
So if you'd like to join, there's no fee or anything like that, but we're there on Tuesday at 1 o'clock.
I would love to join. Unfortunately, or fortunately, I have a full-time job. So I won't be able to, but that's good information to share with people.
I wanted to ask you about the role of Fannie Mae and Freddie Mac. There's been so much said on Republican side, Democratic side, about the role, and the Wall Street Journal has made them into the bad guys all along.
Yeah.
Put all the blame on them. So I was wondering if you would address that.
They did play an important role in the housing system because they did purchase a lot of these mortgages. And when the mortgages went sour, Freddie Mae and Fannie Mac got in trouble and had to be turned into more government agencies. So they were involved in this. But to put it all onto them is, I think, going too far. And that they were perhaps irresponsible, but I think it wasn't, it can't all be put onto them. And they had an ambiguous role because they weren't officially government agencies, and then the question was whether, to what extent the government stood behind them and would ensure that they were safe. And the government did eventually basically take them over so that they are now government agencies, which helped stabilize that system some. So I don't think the major blame goes there.
Hi. In honor of the button that you're wearing, okay, I would
Occupy
like to
Wall Street.
ask you, in all that you know about this, in all your experience, what do you think is the role of Occupation Wall Street in terms of making a difference? And one of the things that, the second part of the question has to do with the messaging. There's a lot being said and written now about the framing of the argument and the demands and should there be demands. And I'm very torn about that myself because on the one hand, the power of the Occupation Wall Street is its breadth and depth. because now we have the unions, which we would have never had before because they were always I should say pro-war, and there was all issues with that, and they would have never come out in favor of protests we've seen in the past. So this is a whole new thing, and it has wide scope and possibilities. The minute you start introducing specifics, you start having what happens to progressives in general. They start arguing with each other about priorities, which of course the other side doesn't have because all they care about is the money. So there's never any argument. It's a clear mantra. You just keep saying the same thing over and over again. You can be a moron and be successful. I mean, it's scary, but that's really what it comes down to. So that's my question. What do you think we should do? What Occupation Wall Street's role is, and what the messaging should be, if any, as we go forward. Let's put it that way.
I think that Occupy Wall Street's main strength at the moment is that they recognize, not necessarily in a coherent way, I can talk about the organizational structure of it, that they recognize that Wall Street, banks, corporations, big guys are involved, and that the government's in cahoots with them. They recognize the two together. And before you can do anything, you first have to recognize what the problem is. And I think that they are mobilizing people and getting people to be aware that this is not simply, it was a shame that they repealed Glass-Steagall. The problem's a bit deeper than that. So that I think the extent to which people are responding to this really is indicating that people see that there are things fundamentally wrong, fundamentally unjust, unfair, and that it's the corporations and the government together that have to be dealt with. And that I think is really the beginning. And it's exciting to talk to the people there. It's a huge variety of people, of course, there's a wide age range. It's still predominantly white, but it has a fair proportion, a small proportion, but growing proportion of Black and Latino people. It has college students, it has unemployed, it's got a wide range, and it's got a few nuts. Okay, we've got nuts in it. We've got nuts in the ruling class, so why shouldn't we have nuts in Occupy Wall Street? And they are very much into educating themselves and educating other people, so that they have, and they're talking about moving towards kind of a free university and setting up seminars and exploring how things work. It's a very, very serious educational process. So they're not saying we know what's going on. They're not saying we know what needs to be done. They're saying now is the time you really need to learn. And they're saying we. Okay, as opposed to what did I do wrong? How come I'm unemployed? The self-blame, which is so debilitating, and that's really, that's really important. That the people that are unemployed now can really, instead it used to be people would say, oh, if only I'd got more education. Oh, if only, and now they say, I'm one of the unemployed, and it's not me. Things have led to this. Okay, what things? Well, let's find out. Let's do the education. Let's do the study. And so some of the talks that are given there are really good, and some of them aren't. That's okay. That's called education. They're also very, very concerned about maintaining democratic discussion, and the real positive part of that is clearly that they want people to think for themselves. And to actually be involved in making decisions. They don't want to delegate authority to other people. At the same time, it does make it a little hard to organize, so that they are moving towards other levels of organization, because their general assemblies, which take place every evening at 7, is kind of a complete participation, direct participation of all the people that are there. And if you agree with something, you put your hand in your air and wave your fingers so you don't disrupt by clapping. If you disagree, you put your fingers down. If you're not sure, you go like that. And that's fine. You can manage that with maybe 200, 300, 500 people. 3,000, I don't think it would work. Okay, so as it grows, and I do think it will grow, Whether the actual occupation of Liberty Plaza or Zuccotti Park continues, that's one part of it. But I am convinced that the people there are going to continue, particularly the educational part and the mobilization part. And the people there can be mobilized to participate in many different activities. So that Sotheby's had a union, and the union was on strike, and so they all went down and joined the picket line. And there are a lot of activities, and now instead of saying that's interesting and writing it down, they're saying let's go and join with that because we think that's important. Washington Square has every weekend on a Saturday, they have mobilization for students and again kind of discussions and education. So very much a learning process. And I think one of the reasons I'm so excited about it really is that there really has been a huge gap between the 1970s and 1960s, 70s and this period, that those people who were active in that period, we did not manage, I'll put myself in this too, to create ongoing organizations that could carry those lessons forward. So a lot of the time they're having to learn from scratch. And that's a shame because they're going to make a lot of mistakes when you learn from scratch. But we haven't really had the organizations to continue to provide that education ongoing from one generation to the next. And I think it's starting again, not just in this country, but other countries as well. We're clearly much less active in the United States than in many other countries where they have mass general strikes. And the austerity programs that are being imposed there, in some cases not as severe as the austerity programs here, but they are able and concerned to put up a resistance to it, because it's not necessary. It's not necessary to reduce our standard of living. I saw one article saying, well, people in Greece are just going to have to reduce their standard of living by 40%. What? By 40%? Yeah, well, that would get the economy going again. I say, what economy are you talking about? The production could continue. It's not that production has been really hurt. I mean, maybe global warming will eventually hurt production, but at the moment it isn't that we're incapable of producing more every single year. That's all there. There's absolutely no reason in real terms for any reduction in the standard of living. None. No reason at all. Production has not fallen. We should be able to keep going up. But we're not, obviously. I like Occupy Wall Street.
I have two questions. One is President Obama has built his administration about 1,700 people, as far as I know. Many of his top people from the finance sector all came from Wall Street, all came from the Bush administration and the Clinton administration.
Sorry. Yeah.
And there's virtually no one that's progressive in his whole administration. What was your reaction to that?
I mean, he did take in Geithner and Summers and many other people from Wall Street. I think he came in without much experience, put it that way, in finance, in economics, and relied on the old people. And he's very beholden to them. I think it was Geithner one time was saying, somebody asked whether Obama supported some policy. He said, I make the decisions, not Obama. Which was kind of embarrassing. I mean, to actually say, but they are making the decisions without him. He's not really in control as an individual on this. But as I say, they enforce their rules through through their control in the banking system, so that if Obama does something and the markets fall 4%, that looks bad on Obama. And so as long as he takes Wall Street and the markets as his index of how well he's doing, he's just going to continue to.
In other words, he's willing to sell out America for a second term.
I think he, yeah.
My other question is, what, in your opinion, what would have happened if the banks had not been bailed out? I have never heard a really good answer.
I say I think we'd have had 30% unemployment. I think we'd have had 30% unemployment if he hadn't bailed out the banks. If he didn't step in, I think it could have been done better. But if employers couldn't pay their workers and laid them off, and then the people that are laid off in turn can't buy the goods, and other people are laid off, and that could be really chaotic. And we do need to have a functioning system in which money flows. And you cut that off, it ripples through the entire system. You don't want that to happen. I say, I'm not saying the way he did it was the best way, but something had to be done to shore it up. So that, the comparison is often made, but I think FDR did better, was when he declared the bank holiday in 1933, closed all the banks down, reorganized, restructured, refinanced, opened them again. That's kind of the bold move that needs to be done with our financial system. Obama wasn't really up for that. So instead they threw money at it. Well, we did have a federal bank. We had the Federal Reserve was in existence, but it was kind of weird. It's still officially private, but as I say, I think the problem is more that it's governed by the banking system rather than its actual legal ownership, I think, is the problem. The legal ownership doesn't have all that much. It's controlled by the Federal Reserve Act, and Congress does regulate what the Federal Reserve can and cannot do. So our Federal Reserve has two goals, which is, they're not doing too well on one of them, which is to maintain full employment, prevent inflation. The European Central Bank has just one goal, which is to prevent inflation. So at least we have on paper that they're supposed to care about unemployment. I guess that's good.
But didn't the Federal Reserve put out $16.7 trillion to the banks and to the European governments secretly?
I mean, they did, some of their bailout money did indeed go to European banks that were operating here, because I really just tried to talk and maybe that's a fault, in terms of just what went on in the United States. But clearly, finance is international at this point. And we are worried about what's happening in Europe and whether that debt crisis is then going to come back and impinge on the US, which could happen. I mean, today they said that they think they've sorted it out. I don't think they have. I think the sums that they're putting into the refinancing of European banks aren't enough. They're putting in 600 billion. They probably need $1 trillion. And they cut the Greek debt. They made the banks that owned the Greek bonds take a 50% cut. They should probably have made them take a 60% cut. So, we'll see more kind of develop over there. But no, the Federal Reserve does have to pay attention to what goes on in Europe as well. They're not very popular over there in Europe. For kind of telling the Europeans what they should do when a large part of the crisis that we had impinged on them. So they're more likely to blame us, and then to have the Federal Reserve coming over and say, tut, tut, you should do this, you should do that. They say, butt out. They're saying the same thing to Britain. What Britain telling them what to do with the euro, and they say, you didn't want to be part of the euro, so don't tell us what we should do.
You made a comment earlier that you felt that the ruling class is dysfunctional. You also presented it as if they were really as stupid as they looked. But I have a problem with that, because I feel that the G20 is so collusive, whatever the word is, they're operating together on such a high level that it's almost as if this is by design. I mean, I don't know if anybody saw The Ascent of Money by Neil Ferguson, and he's not a progressive, but one of the things he details in his book, and also the wonderful video series that he produced on it, is the actual banking system from the time of the barter economy all the way through to the present. And one of the things he shows is that the booms and busts have been going on forever. and they're predictable at this point, and that they always benefit the ruling class from it. So they really have no incentive to stop it. So it's almost as if it's by design where we are right now. And that's what's very disconcerting about it, I think, because how do you think outside of the box, which is what Occupation Wall Street is trying to do in order to create a new message, when you've been stripped of the opportunity, at least in our country, of having a real education about economics, because we learn nothing about labor history in our schools. That's why Europe and the rest are much more on the money when things happen. Yeah. They get out there right away because they know their labor history. They have to read Émile Zola's Germinal. We don't even know what that is here. We stumble on it by accident in our 50s. You know, it's sad.
We do have Grapes of Wrath.
Yeah, that's true. That's true. Yeah. But do you agree that it is a complicit thing, or is it not?
I mean, I think at this point, the fact that they can't even really appease the working class, they can't pass anything in Congress, is a real problem. That's not a really smart way of handling things. In terms of the booms and busts, yes, the economy is inherently unstable in that sense, but you can't predict when it's going to happen. That you really can't do. You can say, you know, every time a crisis comes, oh, well, we've sorted that one out, it'll never happen again. No, it happens again. But there are always different specifics on exactly how it happens. So that this crisis, the housing bubble, did have a large part to play in it. It didn't have a large part to play in the Great Depression. That was not centered around a housing bubble, so it changes over time. So I think the overall strategy is the central banks, the IMF, kind of giving the kind of the call for the long-term strategy. But in terms of the more short-term, immediate steps that could be taken that would protect their own interests, I think they're doing a bad job. So that's what I mean, that they're dysfunctional. It's interesting to see how they're trying to deal with Occupy Wall Street, because they know that if they just jump on it, that could backfire. They're hoping that the weather will turn, bad, and that will help them. And this rain doesn't help our side, but they say they're stronger than that. I think it's a good thing Obama has made some little step in terms of student loans. So they're all going to go home now? No. They'll say, good. And now we want not just that, we want to have free education. How about that? How about free higher education, as opposed to, we'll let you pay off your loans more gradually? Kind of a difference on the level there. So that they're not even making significant gestures that could perhaps have kind of pulled some people away and say, well, I think our government's dealing with it. People do not think that either Obama or the Congress are dealing with the economic crisis. I mean, they're obviously right that it's not being dealt with. But I would have expected them to make a better showing of at least looking to be doing something. Okay.
I've read from the newspapers that corporations in the U.S. have perhaps $1 trillion or so overseas that they've not brought back for whatever reason, tax reasons. They also are sitting on perhaps $1 or $2 trillion in corporate profits that they're not reinvesting. This freeze that there is occurring on the not releasing capital, I get the impression from what you're saying, this is a deliberate policy on the part of either corporations in this country, and is the government doing anything to counteract it?
And you could have a wealth tax. You could start taking it away from them. If they're not going to invest it, you have a wealth tax. As opposed to an income tax, in which you confiscate a certain portion of wealth every year. It's not a particularly radical policy. No, they wouldn't. No, Congress would not support it. But in terms of what can be done to mobilize those resources, that is a measure that can be done. That many countries have, in the past, have taken a certain portion of wealth on an annual basis that can then be reallocated through the political system. But no, our political system is nowhere near that. We don't even want to tax their income. We want to cut the taxes on the rich, which is clearly not what the general population wants. But that's the direction they seem to be going. And they're saying, well, these are the people that provide jobs, except that they don't. And so we can't tax them because that would be job-killing measures. No. If you take the money away from them and then the government spends that money, that would be fine. But no, then they're not moving in that direction at all. They have no intention.
Away from them, they'll have to make more.
Sorry?
They'll have to make more.
Yeah.
What is the concept of taxing every stock exchange transactions, say 1/10 of 1%?
There are variations on what's called a Tobin tax. And a Tobin tax is a tax on transactions to slow down the speculative move, so that it's used particularly for foreign exchange transactions as well, that if you buy a government bond and then sell it within 6 months, you have to pay a certain tax. So you can't kind of spin it very, very quickly, and so it brings more stability into the system. So that the churning of stocks is very disruptive to the system. And the New York Stock Exchange is simply the exchange of shares. There's no mobilizing of capital. That takes place through investment banking. The stock exchange is just one share from another. And we see right now incredible volatility in the stock market. 3% up, 3% down, 10%. Huge volatility, which increases uncertainty in the system, and uncertainty makes everybody, including the banks and including businesses, more cautious. So that I think a transaction tax really, by introducing a little more stability into our financial system, would help. Again, I think the chances are kind of slim at this point, but that's been around as a proposal for quite a while. It's James Tobin, I forget when he first proposed it. It might have been 1965 or something like that. It was a long time ago, but it has been brought back again, particularly when countries are destabilized in terms of capital flows and there's a run on a currency. A tax on those transactions can really provide some valuable protection against just crazy speculation.
Last question, we have to go.
The question is, the argument with corporations are, well, we are going overseas and building our plants because our corporate tax is too high here. Would a lowering of corporate tax bring back those corporations?
They want to bring it back if they can have the tax rate lowered to 15% or a tax holiday. And that would give kind of a little temporary boost. But the reason they have it overseas is partly taxes, but mainly because they're expanding overseas as well. So that they're expanding overseas. When General Motors, which does more than half of its business outside the United States, makes profits in Brazil, it's so they can expand production in Brazil. That's one reason why they keep it there. They don't want to bring it back and then send it back out again. But we have a lot of foreign investment in the United States as well. We have more money coming into the United States than we're sending out. We're a debtor nation at this point, and I have been for 5-10 years, so that people often don't see that. So that HSBC is British capital, Hong Kong, Shanghai Banking Corporation, old British imperialism in China and Hong Kong. National Grid is British multinational. We've got a lot of foreign capital in the United States. The measures to try and slow down imports from China are leading China to start trying to kind of what's called jump the tariff wall and invest in the United States, so that we're getting a lot of capital into the United States as well as sending some out. So it's often we don't really see that as much. You see that it's capital's leaving, but there's less information about the capital coming in.
Thanks so much. Patty, thank you so much. Okay, and thank you all for coming. Good night.